All right, so let's get to the third part of this presentation, and that's our trading strategy. This is what you've all been waiting for. Now, this strategy is usually reserved for our members of Specialist Trading. This is one of our better proprietary trading strategies, but we're going to share it with you in its entirety today. We're going to give you all the rules so you can start using this as early as tomorrow. But we always advise everyone, either if you're a member or someone just attending our webinar, to paper trade first. There is so much more that you can learn by trading any one of our strategies by paper trading, regardless of the time frame, for another week or a month. It doesn't matter, but you really understand the process and see how it unfolds in real time if you paper trade first. Okay, so that's our only suggestion. All right, here are some of the highlights of this particular strategy. This is actually called strategy number 1 at Specialist Trading. It trades stocks. It's perfect for stocks, but it can also be transferred into trading the E-mini futures and the Forex markets. You can trade it in any time frame. You can go both long and short with this. And if you're day trading, if you're looking at small intraday charts, you can get anywhere from 1 to 3 trades per day. If you're position trading, just following a few stocks, you get maybe 1 to 2 trades per week, 1 to 2 setups per week. All right, here are the indicators. The only 2 indicators we use. Now, our basic tool, which we use on virtually all of our trading strategies, that's the buy-sell line, the 50-period simple moving average. You already know how to apply that. So the only other indicator we're using is the 21-period Donchian channels. Now, this is a very common tool that's found on many charting software packages. It's basically 3 channels that's going to help us determine our entry and our direction of the short-term trend. Now, I know a lot of people have access to the Donchian channels, but some do not. If you do not have access, please call up your tech support service. They may be able to get the indicator for you, or do a Google search. I know there are many free sites that offer the Donchian channels. Okay, so it's lots of ways to acquire the Donchian channels. All right, here are the rules now for going long. I'm going to go over these very quickly, because you'll have this video here, you'll be able to backtrack and look at these rules, but I want to spend a short time just going over these rules because I'd rather spend a longer time showing you the actual charting examples. I feel it makes much better sense to actually see the chart rather than to just look at the wording here. But rule number 1, price must be above the buy-sell line, the 50-period simple moving average. This is with all of our strategies. We will not go long unless price is above. All right. Rule number 2, all 3 of the Donchian channels must be headed in an upward direction. Okay, so we need these 2 things to be in place. Now we're going to look to buy when a declining price bar's range is entirely below and not touching the middle Donchian channel. If we have a bar that meets these requirements, this is going to be our setup bar. All right, so what does that mean if we have a setup bar? Well, this means that if on the next bar and next bar only, if we trade 1 tick above that setup bar, then we're going to go long. This is our confirmation method in effect. All right. If we go long, if we enter on the next bar after that setup bar, we're going to place our stop just below the lowest low of the pullback. So we have our entry, we have our stop in place, and then we're finally going to exit when price touches the highest Donchian channel since we're going long. Okay? Once again, if this doesn't make sense, you can always go back and make a copy of this or write these rules down, but let's show you how this process unfolds on a chart. Once again, we're not showing you what the stock is or the price because I want you to understand the process behind this method. All right, too many people focus on looking at, boy, well, this happened in XYZ. Let me go back and find that. Or what price was that? They only made this much or they made that much? I'm not concerned with that. We're only concerned with you understanding the process. So the first thing we ask ourselves is, where is price in relation to the buy-sell line? Obviously, price is above. So this means we're looking for a long setup. Okay, so right off the bat, we're not even going to concern ourselves with going short. We automatically know we're just a buyer at this time. Now looking back in hindsight, this would have been the most probable place, an opportune place to go long. So how could we have taken advantage of this looking back in hindsight? Well, the first thing we do is we add some structure to our trade, and that's the Donchian channels. These are the 3 Donchian channels. As you can see, they have this stair-stepped upward approach, and we want to see the Donchian channels all in sync with each other, all in this same stair-step upward movement. Now, even though they may not be exactly the same, they're all coming from a lower level, so this means they're all rising. The next step is we want to see price decline while the Donchian channels are still moving higher and while we're still above the buy-sell line. We want to see price decline, and then we want to look for a bar that is completely below this midline. its range is completely below. Do you see how this range is touching the midline? And this bar is too, but this bar is not. So this is our setup bar, circled in blue here. This means that we can go long if on the next bar and next bar only we trade one tick above, right here, basically where this green horizontal line is. All right, well, here's the next bar, and as you can see, we never got that high. So the trade is negated. All right, so the trade is over. We never got that high. We do not wait for another day or two for us to get to this point here. We simply say, well, we never got there, so it's over. But guess what? All the rules are still in place, so we can continue to apply our confirmation method because this is now a valid setup bar. Okay? So we don't really have to negate the trade and walk away. As long as the rules are still in effect, we now go to this lower bar. So we'll enter if we trade one tick above this bar on the next bar, and we did. So this is where our entry is. So we've entered into the trade to go long. We place our stop just below the low of the current sell-off. So we've entered here. We're either going to get stopped out with a small loss, or the train is going to leave the station and go in our direction. And if it does, once it touches the top Donchian channel, that's our signal to exit. You can either have a limit order or exit at the market. Okay? And that's it. That's how simple it is. We're looking to buy in sync with the trend. We're looking for the bar that is completely below the midline. Once we enter, we place our stop below the lowest low and wait for price to resume its upward trend.